Hey everybody, welcome back. So I wanted to do a video based upon what's going on in the markets right now. Everybody wants to know, Steve, what's going on? Are we in a bear market? Are we in a crash? What is going to happen next, Steve, is the question that I keep getting over and over, especially over the holidays, mostly with family. So the bottom line is today was quite astonishing. And I just want to draw your attention to the volatility between this market that we're in right now and this market that we're in now. What I mean by volatility is the market is moving more in one day than it was moving in 4 months, right? The volatility is insane. The daily moves or volatility or average true range is off the charts crazy right now. So what's going to happen next? Everybody wants to know, especially after today when we all thought we were heading into a crash. Well, today's actually really good because it puts in a base here at this 233.41 level. And why is that important? I think the best way to describe that is going to be is best in drawn. Okay, so here we have the market. It's done this, and then we've had this correction now. And this is where we are right now. Okay, so actually, you know what? Let me just do this better. We've had this. Okay, and now this is actually where we are right here. Okay, something like that. So here we are right here. Now one of two things I believe is going to happen. Actually, it's more like that. Forgive me. One of two things is going to happen. All right. And the good news is today is going to be able to tell you which of those two things is going to happen. Now I do not think that we are going to see new highs again in my lifetime. That's right. I do not think it's going to happen, folks. Okay. I think maybe if I live to 90, I'm 50-ish. I think maybe. But I think the market has put in an all-time high for a very long time. At minimum, at least 10 years. So let's say this is a 10-year period. What's going to happen over the next 10-year period? Now, one of two things. The good news is we bounced. Something like that. Now, why is that important? Because this line in the sand here is everything that you're going to need to know about the future. What do I mean by that? Okay. If here's the two scenarios that I see happening. I'll make one in red. The two scenarios are this. We're going to go a little bit higher. We'll come down higher, and then we'll break it. Now, this is the 10-year period, so this could be 1 year. Okay. Now, if that happens, most likely we will do something like this. Okay. Now, this is most likely what the next 5 years to 10 years is going to look like. A cyclical bear market that winds and grinds its way down. Okay. The other option is if the market does this. It bounces here and then breaks it quickly. Now, if it breaks it quickly, that's actually really good news because it means that we'll do something like this and get to where we should be. Okay? Now, what does that mean? Okay, my personal opinion is that current stock valuations right now on the S&P should be 180. Okay? I think the economy is really good. I think we're improving. I think we're doing very well in the economy. But this market has been overly inflated by quantitative tightening, and this whole difference between 180 and 290 is all artificial. Everybody says, well, the market is doing great, the economy is doing great. Yes, it is. It's doing great for 180. It's not doing good for 290. Okay? And it should be 180. So if it breaks and we go to 180 quickly, that's actually a very, very good thing, because then we can base around 180 and slowly make our way back up as things improve. Okay? That's actually a very good thing. However, the longer it takes for us to get to that 180, the worse it's going to be, because it's just going to drag out this cyclical bear, and it's going to make it worse. So, how should you behave? Well, you have to trade this market very differently than you trade this market. Okay? All right? And the catalyst is this new level that we just put in right here today. Got that? So the best thing that can happen for everybody's sake is we bounce slightly, we smash that level within a week, 2 weeks, a month at the most. We bounce, another leg down, we bounce, another leg down, we get it all over with, we get down to 180, and the world is happy again. We're where we should be, and we can grow. If this happens where it takes a long time to grind its way down, unfortunately, I think this is what's going to happen. Unfortunately, I do not think this is going to happen, and this is going to happen. Why is this bad? Well, this is bad because when you have a market that behaves, let me just outline this, that behaves like this, it's very difficult to trade. Why, Steve? Why is it hard to trade? Because really, there's something called, you have to wait patiently for extreme levels. You have to wait for a low, then you have to wait for a high, then you have to wait for a low, then you have to wait for a high, and you have to wait for a low, you have to wait for a high, you have to wait for a low. Well, you can see if this is 5 years, there's only like 8 to 10 opportunities during that time, right? And because you don't want to be diddling in the middle. Okay? This is what I call it. This is what's called this is a balance area, and in a balance, it's a downwards bias balance area, but in a balance area, what this is a big fight. Just think of it like that. So why is it balanced? Well, it's balanced between bulls and bears, but the bears have more control. Right? That's why it's called a balance. It's just an equal balance. When the market is moving directionally, it's not balanced. It's just all, 80% bulls, 70% bulls, 80% bulls, 70% bulls, 80% bulls. When the market balances, it's bulls, bears, bulls, bears, bulls, bears. And you don't want to be diddling around in the middle of that war zone. That's the way I like to think of it, right? I think of it's a war zone between the bulls and the bears. And you don't want to be diddling in the middle. You have to wait till they get to the extreme and then trade it. Okay? So today was really good news. This 233.41 level, that is going to tell me in the coming weeks and months how I need to trade for the next 5 years. And it really is just that simple, folks. We might bounce up here maybe to 253 and then come all the way down. Maybe to 259 and then come down. I personally think that's what might happen, but we'll have to see. But this is the most important number that you want to pay attention to, because how we break this level, either quickly or slowly, is going to predict the next 5 years. Just like that. It's that simple, folks. Okay? I have spent my lifetime understanding the significance of levels and what they mean. And, if you're interested in, learning how to really capitalize on these situations, head on over to my website. I got a few new courses that are coming out right now. Let me see if I go here. I just updated it today. I have my new track record here. You'll see I'm up to 115 trades in 2018 with a 69% win rate. My average profit in dollars is $2,419, and my average return per trade is 3%. Off the charts good. Okay, here's my performance for the last quarter. You can see all the trades that I took. I made 22% in October, 4.1% in November, and 4.5% in December. So a couple of courses that I have offering right now, a new service is my day trading service. It's on sale right now for $6.99, and of course my one-on-one coaching. Okay, hope you guys enjoyed that, and please come back for more, and I will make some more videos. But this level right here, 233.14, that's going to tell you what's going to happen over the next 5 years. It's that simple, folks. It really is. Bye for now.